Abhimanyu could enter the Chakravyuh, right? But he did not know how to exit it. Like many people are able to identify good stocks, but how do you decide that when do you have to sell?
It happened for the last 200 years of listed stock market history that people will occasionally throw things away for pennies which are worth dollars. So that will happen and will continue to happen because markets always swing between these two extremes of fear and greed.
Two great investors of our time, Rakesh Ji and Radhakrishnan Damani Ji. I would like to know like what influence they had on your life.
Recently, Warren Buffett announced his retirement and he's had a very storied career. He's compounded his money at about 20% or so over 50, 60 years, which is almost a Bradmanesque-like track record out there. And Rakesh has a much shorter lifespan, maybe 20 years, 25 years of record history with that. I try to learn not the bad parts of his health, but the good parts about how he viewed this as being a mercenary game, that you have to be the best in it. And I really admired him for that. With RK, he's been my mentor. I've been the chairman of his company, so it's been a real honor to have known him. But in my humble opinion, there's only one man in India who's had three brilliant careers. He used to be... The key things I took away from it is the level of conviction he brought to a trade. You know, he brooked no enemies and brooked no interference. He believed in something, and he put his money where his mouth was. As simple as that.
How can a person spot market leaders?
We in the market, people think it's a T20 game. So every ball has to be hit, a double, a four, or six, and the more you hit, the better runs you score. But the stock market is not a T20 game. It's not even a test cricket game. It's a game where you can have almost unlimited pitches till you find the fat ball outside the off stump, which you can hit for a full toss for a six. And that's what you need to do. And we turned out to buy the stock, and the stock was my first 100 bagger. Okay, before that, no one knew me. After that, nobody could ignore me, as I said. There are 4,000 billionaires in the world. 90% of them have got there because they put money into stocks at some point, not in land, not in labor, not in agriculture, whatever. It's because they hold big blocks of common stock. I see a younger self of myself in Veer when I see him. It's the sheer lust of life that he has. I find it so contagious. So as interesting and as fascinating the last 20 years have been, I think the next 20 will be more fascinating.
Hi Ramesh Ji, thank you for taking out time today. So I'll just tell you that I met you 12 years ago at the BSc building on 6th floor. I was a young kid. I came to you, I was like, sir, I need an appointment. And you told me, sit down, and you gave your 45 minutes of yours at that point of time. And the advice you shared at that point of time really changed my life, has helped me traverse my stock market journey. And two things which you shared on that day still stays in my mind. When there's an opportunity, buy in truckloads. And second, you told me about HDFC story on birthday.
Yes.
So I would like to basically start with the HDFC story. If you can elaborate more on that, what exactly happened?
Sure. So thank you, Sourabh. Thank you for remembering me after all these years and inviting me. It's always nice to come and share my insights in life with the younger set. So thank you for that very much.
My pleasure.
You know, Sourabh, that story of HDFC is very important because there's a moral in the story. The details are not that important, but I will tell you that. But the moral of the story is that when you're young, you want to buy appreciating assets and not depreciating assets. What do I mean by that? When you're young, you want to buy a better couch for your living room, you want to buy a better car, you want to take a better vacation. Whereas if you use that money and invest that, it is potentially after 5-10 years going to amount to something. Whereas if you do a couch or a car or a cell phone, it's almost certainly going to zero by depreciation in 3 or 4 years' time. So that money is forever gone. Now, in this particular story, what happened is that my son was having what we call a Namkaran ceremony, which we have. And as indulgent parents, we invited maybe 200 guests to that ceremony. And 199 of those guests gave him sweets, toys, money, clothes, wishes, whatever. And they've all been forgotten through the ravages of time. Yes. But one of my smart friends gave him 500 shares of a bank. And that at that time was a 25,000-30,000 rupee gift. Maybe it was 50, 60 rupees. Today that sum, keeping on going, forget the dividends that he's got, yes, has become almost 50 lakhs. Oh. And the stock in question was, of course, HDFC Bank, one of the great stocks in India in the last 20 years or so. So it is a very important point to remember that when you're young, if you invest even small sums of money, over 20, 30 years, by the time you become 30, 50, 60, they become large sums of money. So it is the first path to financial freedom is to invest in appreciating assets and not depreciating assets.
Okay, so the key is starting as early as possible and compounding for the long term.
I mean, the stat that I find always hard to believe, that 95% of Buffett's wealth, Warren Buffett is worth over $100 billion, yet 90% of the wealth, maybe 99% of the wealth was made after he was 50 years old.
Yes.
So it's never too late to start. But the earlier you start, the richer you will be faster. So it's like when a snowball goes downhill, you want to make sure that it has a very long hill and a very long time to go through, because it'll keep accumulating, in that case snow, in your case wealth. So compounding is correctly stated, Saurabh, as the eighth wonder of the world.
Agreed. Absolutely. Now coming back to your journey, like when we met, like you mentioned that you were in the US, you came back, you spotted the IT boom. But I want to know, like, how come a person who was like, you were a programmer, but what drew you into the markets?
Yeah, I mean, that's a very simple story. I was the only son, and my family was from a generation of stock market investors, so they were kind of keen to get me back into the market. So, as I've said this many times, but it bears repeating, my father made a wager with me. He said, I'll give you $10,000 and you see what you can do in the US market with that money. And if you double or triple the money, it's yours to keep. If you lose the money, no questions asked. That seemed like a fair bet to me. If I can't lose anything and make something, I took the challenge. And unfortunately, as I've said many times, I lost all the money in the first 6 months in a year in a bull market. And I realized the mistake I'd been making, because that really hurt me. That really hurt the ego of Ramesh Damani. That how could in a bull market you lose your capital? And I learned in retrospect a very cheap lesson, that I was investing looking at the back view mirror, while you should invest looking at the front view mirror. What do I mean by looking at the back view mirror? It was in the 80s when I was investing in America at that time, and the period of 70s was marked by inflation. So a lot of the inflation stocks, the resource stocks, the commodity stocks, the real estate stocks were down 70, 80%. So in my naivety, I assumed, well, they're already down 80%, how much further they can go?
Yes.
As I found out very quickly, they would go another 70% from those prices. And hence I lost all my money out there. What I should have been looking ahead is in the rear view, not in the rear view, but in the front view mirror, and seeing which is the technology industry going to do well in the future, which is the consumer industry going to do well in the future. But it was a lesson, a mistake I never made again. So in that sense, it was not a very costly education.
So you mentioned that, like, that whatever money your father gave, you lost it, and that gave you very important lessons. And in our conversation, you mentioned like you spotted the IT boom because you had a background in tech. So, like, how can a person spot market leaders? Like, because you could, like, in your journey, I've seen you have spotted defense, you have spotted tech, and you've also spotted the PSU boom. So, how can a person identify leaders in a bull market?
More than that, it's very important to identify it, because that's where you make the most amount of money.
Yes.
Because these stocks, once they get from unfavored to favored, will go up 20, 30x in the meantime. So I think one of the benefits, Saurabh, is that I'm an individual investor. I'm a prop investor. I don't run anyone's money. In fact, a lot of people have SMSs with my name running around them, which I don't sponsor in any shape or form. So just an advice to all the people watching the podcast that I don't give any advice on any social media platform ever. So the important thing is that I look for the long ball. I look for a ball that I can hit for a 6. The problem is that once we're in the market, people think it's a T20 game. Yeah. So every ball has to be hit, a double, a 4, or 6, and the more you hit, the better runs you score. But the stock market is not a T20 game. It's not even a test cricket game. It's a game where you can have almost unlimited pitches till you find the fat ball outside the off stump, which you can hit for a full toss for a 6. And that's what you need to do. So you could go by 1 year, 6 months. Patience is more important in this business. And wait for the fat pitch, full toss outside the off stump, hit for a 6. So once you're ready to wait, the opportunities will show up. Every day the market comes and tells you ITC at 400, Reliance at 2000, HDFC Bank at 2200, but you don't do anything about it.
Yes.
Only at sometime during a panic or sometime during a meltdown, market will throw you some unbelievable bargains. We got some real estate stocks 100, that's 8 times that amount. So many stocks at that point. So the market is such a game that you want to wait for that fat pitch outside the off stump and only then hit out of the park. It is not T20. I keep repeating that you have to hit at every ball. In fact, if you hit at every ball, you're probably going to get out and probably not make the runs and the score and the compounding that you want to for the rest of your life.
So you mentioned, you made a very valid point that most, like, you have to wait for bear markets, you have to embrace them, because the major wealth bargains you will find in bear markets, right? So now coming to the question that I asked, like, okay, so as an investor, like, we have to embrace bear markets, but in a bear markets, how do I identify which sectors could lead the next bull market?
That does require a lot of due diligence and work. There's some of the things that are helpful in that the sectors will be very unpopular, because that's when you're getting the cheapest bargains in the market. So I think for the last 10 years before this bull market, no one had made money in any public sector stocks. But what happened as a result of that, people got complacent and didn't do their homework on the stocks. We went and did the homework on these stocks. There were a bunch of new defense PSUs, for example, and rail PSUs that were being listed. And we found that the government was actually throwing these companies away. They're giving them at Ps of 3 and 4 and 5. And more importantly for us, we found the order visibility was very good. We could see the order visibility for the next 5-7 years. So we knew the earnings were intact 5-7 years. And to boot, we were getting a dividend deal. We were getting a 4-5% dividend deal while we waited for these stocks to take off. So it was a very heady cocktail. But typically you will find these combination of factors of unknown and unfashionable. Some combination of those will be there. For example, in 92, ACC, prior to the cement run in ACC had been in a bear market for the last 40 years. And then because of deregulation, it changed and no one picked it up except people who are following this very closely. They always saw it go up and go down back again. In 2000, no one understood the technology sector. I could benefit from it because I was a part of the technology boom in America. And that went from being unfavorable to completely favorable. Prior to that, no one wanted to invest in companies that had intellectual property, were only doing with brick and mortar businesses. And we kind of understood that, so that helped us out there. So in every bull market will have its leadership, but typically they will come when the bear market is getting over, and it's a very unfashionable and unowned sector. The ownership will be very less in the market. That will propel it higher. I think so. Those are some of the characteristics you look for.
That's a great answer, great insights. And sir, how do you identify a bear market is about to start? Because I was watching one of your videos and you said that some of the Bollywood celeb called you, and that was basically in your mind that, okay, this maybe we are nearing the end. So do we look for such insights, or are there any other parameters you look to identify a bear market?
There are many parameters. The saying on Wall Street was sort of that when the public gets wise, the wise get out. In translation, when the film stars start calling you, that means the public wants to invest in stock. That's generally not a good time to invest in the stocks. Also, how the market reacts to news. If, for example, good news comes and the market doesn't go higher, that tells you that the market is tired, or the distribution phase going on in the market. Or the valuations have been stretched, markets have been going up continuously and valuations are stretched. All those give you some indications that the market was probably peaked out in a bear market. Occasionally at the peak of a bull market, the valuations will make no sense to you, but they go up because they go up. I think typically the market pendulum swings from extreme despair to extreme love, from fear to greed. And I think at the higher end of the spectrum of greed or high valuations is a good time to take money off the market. Having said that, just because stock doubles is no reason to get out of the stock. I mean, the saddest thing is I've often said, and I'll repeat it because I really enjoy reminding people of that, the saddest thing in the stock market is to make 20 points in a bull market when the stock could potentially go up 20x. So you have to hold for the long run. But I think if you watch the market and think about it, you will very clearly discern whether it's through news, whether it's through leverage in the market, or whether it's through optimism, when the market is showing signs of peaking out. And more often than not, it will be a combination of leverage and the public getting into it full stream.
Okay, so when your barber gives you advice, that's the time you basically exit your stocks.
You know, to be a bit sexist and racist, I used to say when your mother-in-law comes and tells you what stock to buy, that's the time to get out. But the barber, the panwala, the mother-in-law, you can use whichever one you want.
Okay, sir, and like drawing back to Mahabharat, like Abhimanyu could enter the Chakravyuh, right? But he did not know how to exit it. So like many people are able to identify good stocks, but how do you decide that when do you have to sell? Because as you said, like a stock can be potentially be a 20 bagger. So how do you have the conviction to ride the stock for such long period? I think you have held stocks for 15-20 years in your portfolio.
Almost unchanged. Yeah, I think it's a fundamental business of doing the math. I think that really helps. A good long-term investor will do the math and understand the value of the asset he's buying. Now you can ask, how is it the market misprices these assets so much? How come you get as proverbial rupee ki cheez 10 paise mein, so it will go up 10x out there. That's the way of the market. I don't know why that happens, but it happens. It happened for the last 200 years of listed stock market history, that people will occasionally throw things away for pennies, which are worth dollars. And so that will happen and will continue to happen, because markets always swing between these two extremes of fear and greed. So when people are fearful, they say, let me get out whatever I can from this business. And someone who understands the business, will be able to profit from it. To give you an example of, say, the PSU stocks that you mentioned, again, in a matter of academic and not for any recommendation purposes. When some of the defense shipyards were listed, they were trading at basically cash value. They were at few thousand crores market cap, and they had equivalent amounts of cash in the balance sheet, plus with order books for 5-7 years. That's what we call cheap in the market, and plus you're getting a 5% dividend yield to wait. The only thing was that if a party happened, would the public come? But they always come. When there's a party, they always join on. So as the earnings exploded, the public started coming and being fascinated with this company. There's good corporate governance. The corporate governance improved with these stocks. The earnings profile improved with the stock, and a whole bunch of investors. What really helped me, Sourabh, just to understand that there was a lull period in PSU, like I said, for 10-15 years. They didn't give any return. In fact, gave negative returns. So people were disillusioned by holding these public sector stocks. Two things happened. First, prior to that, they had a great run, which people forgot about, which I had participated in. So I had bought stocks 20 years ago called Bharat Electronics, Bharat Movers, which gave me CMC, which gave me 50, 100. So I understood the value of these business propositions. They were commanding heights in the Indian economy. What needed was corporate governance. And I think when the Modi government came in, after 3-4 years, the corporate governance improved dramatically in these businesses. The defense leakage that used to happen, the railway contracts that used to go late, were all solved basically. And that led to this huge bull run.
Amazing. So you mentioned about corporate governance, which is also like a good part. Like we should know about management quality when you're investing in a business. How does a normal retail investor identify management? Because we can look at numbers, but how do you take that judgment call while identifying the management, whether they can deliver or not?
It's like how you find a spouse, you got to pray. You find the right spouse. No, I'm joking. I think it's good that when you meet entrepreneurs, they have a sunny side. They look at the bottle as half full rather than half empty. It helps that. Then they have a combination of integrity, energy, excellence, and integrity is very important, because if he doesn't have integrity as energy, he'll probably head the company into bankruptcy out there. But there are ways. I mean, if you just listen to, all the entrepreneurs are now on YouTube, con calls are there. You can just listen to them. How do they talk? Businesses, if they grow at 20-25%, are very, very attractive. Okay, so a promoter comes and tells you, I can grow the business double in this year and double the next year and keep doubling. He's talking through his hat. It's not going to happen out there. So I think the quiet, reticent one, the ones who go to work every morning, the ones who love the business, ones who are passionate about the business. There's an old song that says you can know a lot by just looking. And I think if you just look and understand it and trust your judgment, is this the guy I would trust with my money? If you just ask yourself a question, instead of the guy who makes wild promises to you, I think you'll be able to judge them. But it helps to have the skin of optimism, integrity, and of course a little bit of luck is always necessary.
Absolutely. And so that's drawing back to a conversation which you mentioned 12 years ago, and it still stays in my mind. You said that when there's an opportunity, buy in truckloads. So how do you have that conviction to basically bet big? And how much should a person, if I have a conviction in stock, how much % of my net worth should I put in that stock?
Yeah, I'll answer this question in various ways. Like I told you, I studied overseas. I was in the Los Angeles area. And they had a basketball team there called the Los Angeles Lakers, if you're familiar with basketball. Very storied team, won many championships out there. And they were on a losing streak when I was first initial years. So in midstream, they fired the coach. They had a new owner. They fired the coach, brought a new coach in there. And they went on an amazing winning streak, 6-7 games in a row they won. And someone asked the coach, what is the secret sauce of his success? How did this team go from losing to winning? And he said, I just make sure the boys show up on time. That was his thing. So the first thing in the stock market is that you got to show up every day. Okay, it's not like you show up when the market is making a new high, or when there's excitement on the street, or when the budget is being announced, or when earnings come out. You have to show up every single day of the market. And then over time, the fog lifts, the cloud clears, and you get an idea of value. You know, that proverbial full toss ball outside the off stump, that's only, if you're there every day in that business, you will get it. I'll give you an example of a full toss that was thrown to me. I started going to the market every day, but I was struggling. I wasn't finding, my rhythm. But I was going every day trying to find a deal. And then one fine day, a friend of mine told me, here's the balance sheet, Ramesh, would you study it, And I remember studying the balance sheet at night and not being able to sleep because it didn't make sense. I mean, this company was so cheap.
Yes.
I said, how is it so cheap? But the point is that I showed up that day and he gave me the balance sheet. If I showed up once in 3 months or 6 months, hey, what's going? Probably would not have got the balance sheet. You show up every day and that gives you this thing. And we turned out to buy the stock, and the stock was my first 100 bagger. Okay, before that, no one knew me. After that, nobody could ignore me, as I said. And the stock happened to be a company called CMC at that time. So the point is that you show up every day, you pay your dues, and it happens when it happens. It could happen 6 months into your journey, it could happen 6 years into your journey. But the opportunity will show up. But you have to be ready. You have to show up when the opportunity shows up. I think that's the key.
That's great. In fact, you mentioned about CMC when I first met you, and that definitely changed your journey.
It changed the trajectory of my career, absolutely. Because see, now understand what Buffett calls the circle of competence, Sourabh, that I was from a technology background because I was a programmer in America, as you mentioned out here. And in India, at that time, only cement was working, which I had very little understanding of. But technology was within my circle of competence. And when he showed me this, and I looked at the valuation, I said, this doesn't make any sense because CMC, for your reference, had computerized the Indian railway system. They had computerized the BSE trading system. If I did an RFP, even at that time, for computerizing the Indian railway system to IBM, that would probably cost $100 million, even in the early 90s. And here you're getting this entire company for $5 million. It didn't seem possible. That's very cool because you understand that business. I may not understand steel, I may not understand fertilizer, but I understood a little bit of technology, okay? And that became my first big break in life. I was also fortunate, of course, that the technology boom overtook India in the next 10 years or so, and this was one of the few companies at the leading edge of that. So that was the lucky part.
Amazing. So like when you identified CMC, like before that you mentioned that your father gave you money and like you lost it completely. How did this change your journey? Like, because you could identify, and when people around you were ignoring this stock, I think you mentioned it was available at 30 crores valuation. So how did that?
And just to remind you, for 30 crores, even at that time, you could barely buy a flat in South Bombay. 30 crores was not. It was just throwing it away basically. People didn't understand that business. They were throwing it away. You could have bought. I could have bought 10% of CMC for 3 crore rupees. You probably couldn't get a flat in South Bombay for that much money at that time. It was that cheap.
So how did this change your journey? Because holding onto a stock that has become 100 bagger, 200 bagger, how did this change you, and what, like, your dad's perception about you? Like, how did that change?
Well, they say the only mistakes in life that are not worth it are the ones that you don't learn anything from. And I learned a lot from the mistakes I made in the early years. And I was always very interested in reading. So I had already read about Buffett and thought about long-term compounding and these things. And there's a very interesting discussion that in the 90s I had with my father, who had been in the market for 20 years and was a very astute investor, but he was fishing in a smaller pond. The pond grew measurably when I was in the market. And we would be lucky enough to buy Infosys, and we were lucky enough to buy CMC. And at some point, my father, when we doubled or tripled our money, he said, we should take our money off the table and sell those stocks out there. And it didn't make much sense to me. So I said, why should we sell it? He said, book your profit. Trees don't go to the sky. And then I said, then what do you do? Book your profit, you'll pay the taxes that are due. And then I said, what do you do? Then you find other ideas. And when the other ideas, I said, what is the other idea? Still Infosys and CMC. Why should I look for other stock? He said, it doesn't happen. Stocks don't go. But because of my education background, because of looking at global markets, I understood that sometimes stocks multiply for years of time. A good business doesn't become bad because its price has gone up 2 times or 3 times. I think that helped me a lot in trying to understand that the value of a business compounds over long periods of time, and that a good business remains a good business for 10, 20, 30 years sometimes even for 50 years. And I think that was, if you ask me that each generation has to bring something to the
Yes.
table. My father bought the basic skills of the stock market. I kind of extended to make long-term wealth through compounding.
That's a great story. Now, talking of long-term wealth, I read in one of your interviews, or like I think listened to it, you mentioned about Lottie Marcus, and that's a very unearthed story of compounding. I would like that if you can elaborate more on that, because when I listened to it, I was literally amazed, like how they grew wealth over so many years.
It's a great story, Saurabh. I'm glad you brought it out. I'd love to share it with you. I think I forget the name of the two principals, but they named Marcus, Lottie and his wife.
Yeah.
And his wife first was immigration from Hungary, and she came to America as a Jewish refugee, and she started working for Benjamin Graham, who's the father of, intellectual father of Warren Buffett, if you will. But, well, Graham was a great stock picker. He was a bit of a ladies' man. He kind of hit on her, and she didn't kind of like that. So they remained friends, but she then went and married this other refugee from the old world. And he was a dentist, and she was a secretary. But they remained friends. Benjamin Graham and the Marcus remained friends. And she invested money according to what Benjamin Graham said. And then when Benjamin Graham was almost about to retire, he said, go follow this other person, he'll help you. And they followed that. And they lived always below their means, always below their means, and kept investing in good businesses, good whatever. And then they turned about 75 few years back, 5-10 years back. They were 75, 80 years old, and they said, well, what do we do with the money we have out there? And so they decided to make a contribution to the Israeli Negev University for water. They believe that a lot of the wars in the Middle East are because of water, and if that can be used to help, they would do that. Surprisingly, over 30, 40 years of straight investing, that wealth had become about $225 million US. This is a dentist and a bookkeeper who had done nothing in life, lived below the means, and invested the money, and that few $100,000 had become $200 million plus. So they drew up the papers to give the money to the Negev University. And yet, by the time they finished drawing up the papers, there was a bull market, and the wealth had gone from $225 million to $300 million now. So they gave up $300 million. But the important part of the story, which I always tell my son and anyone who listened to me, is that when they flew down to make, and that was the largest single contribution ever made to Israel by a private person, $300 million to Negev University. Lottie Marcus and his wife flew to Tel Aviv in economy class. They were making a $300 million donation, and yet they were so careful with the money that they flew economy class to make it. And that really made me understand the concept that sometimes you have to be trustees for wealth, that this game you keep score with through money. But it's so important that we are so blessed that we also have the ability to give back and to share our wisdom and share our fortune with someone perhaps a little bit less fortunate. So I was very impressed with that story.
Oh, that's an amazing story. Now, talking of philanthropy, like you have had a great career, you have made your wealth. Like what kind of legacy do you want to leave behind, and what kind of philanthropy activities have you planned in your mind?
I've only started in a very limited sense, so that's bad in the sense that I think I'm catching in years. I should be doing more. We have given individually to some universities, education, whatever. But I hope in the next 5-7 years it will be more pronounced. See, Saurabh, you must understand that there was a cohort of people who were called the Midnight Children. People born after 1947.
Yes.
When the clock struck midnight and India became free, as they say, we had a tryst with destiny. I was born in 1957, which was at the end of the Midnight Children band, if you will, out there. But in many ways, my generation born in the 50s was what we call the blessed generation out of India.
Yes.
Because we came of age in the 80s. What happened in the 80s? The Berlin Wall fell. Liberalization happened.
Yes.
The globalization took off. China entered WTO. All the tailwinds that were missing for the last 20, 30 years in India's economic development took place in the span of the next 10, 15 years when we were there. When I came, as I never get tired of telling people, the index was 800. Today it's closer to 80,000.
Yes.
You made 100 times just by being in the index. So in that sense, we were a very blessed generation. And I think we have an obligation, and I'm really impressed to say my friends Motilal Oswal, donate very liberally to education. Two stock market friends have built two of the finest universities in India.
Yes.
One in Delhi called Ashoka University, one in Pune called Flame University. A lot of them are giving back very generously of their time, of their money. And I would be remiss if I didn't do that. So I hope in the next 5-10 years of my life, I'll be more prone to doing the works or giving where I believe it will be well spent.
Okay, now drawing back to, we're talking about money. When we met, you mentioned that my friends are billionaire and I am not. And that's one regret you mentioned 12 years ago. I was watching your podcast, one of your podcasts last week, and you mentioned that same statement. So like wealth after a point doesn't, like, it's like you cannot be satisfied like beyond money, right? Like you can have 100 crores, 200 crores, 500 crores. There's no end to it. So I want to know your thoughts on money and why do you say that basically your friends are billionaire and you are not, and you regret that?
See, Saurabh, it's very funny. You made a number of points there. You know, do I have the financial freedom? Yes, of course
Yes.
I do. I think anyone in the market who's done successfully has
Yes.
financial freedom under there. But how do you measure yourself? Okay, if you are, say, making movies, did you win an Oscar? Did you win an Emmy? You can measure yourself. If you're a great mathematician, did you win the Fields Prize? If you're great in architecture, did you win the Pritzker Prize? I mean, there are ways you can measure it. In the stock market, there's no way to measure it other than the wealth, other than the zeros in your bank account. Okay, so whether you do with the money is not important, but you should be measured by money, and that's the way it should be out there. And I regret the fact, not because I feel envious of them, not because I need more money. I have a comfortable life, thank you very much. But I realize that within me burns a desire to be the best in the business. And the best of the business is measured by, with the zeros you have. There are 4,000 billionaires in the world. I think 90% of them have got there because they put money into stocks at some point, not in land, not in labor, not in agriculture, whatever. It's because they hold big blocks of common stock. And, I think what limited me was my own lack of foresight, ambition. I don't want to blame anybody else. It was my own mistake. And I regret that fact that, I could not break out of the straitjacket that I'd imposed on myself. My friends did, and I think more power to them. I regret that. And it's not, believe me, and I mean that with all humility, it has nothing to do with the money. And it's not that I'm going to live any differently than I live right now with more money. But it's a point to prove to myself. I think I want to be a malcontent. I don't want to be happy about it. You can always be happy in life, whatever, but I think it's the malcontents that build the pyramids in Egypt, or build the Taj Mahal, or build, the Golden Gate Bridge, or whatever. You have to strive. I think it's almost a sin not to use God-given talent to the best possible use.
That's a great perspective, like being the best at what you do. But I don't like. I would agree that you are one of the best investors we have.
I mean, that's very kind of you, but the best is measured by dollar terms. Now, you can take that money and do what you want with it. I have no issue about it. You can give it all to charity. You can build the Taj Mahal. That's fine with me. But in order to come to the short lift, you need to measure yourself by that. And it's not how you spend it that's important. It's that you made it legitimately. Of course, it all has to be legitimate. And like I said, I was part of the blessed generation. We had that opportunity. If I didn't have the opportunity, I wouldn't be complaining. Did I live up to my potential? I don't think I did. But did I have the opportunity? There was the potential there in my career? Of course it was there.
Okay. So you mentioned about your friends taking that advantage, betting, basically buying in truckloads when there was an opportunity. And like two great investors of our time, Rakesh Ji and Damani Ji, Radhakrishnan Damani Ji. I would like to know like what influence they had on your life.
Well, you think you understand about Bhaiya who passed away is that, of course, he paid, a huge price for his success. He paid it in his health, not seeing his children grow up. Of course, there's a price for it. But recently, Warren Buffett announced his retirement, and he's had a very storied career. He's compounded his money at about 20% or so over 50, 60 years, which is almost a Bradman-esque track record out there. And Rakesh had a much shorter lifespan, maybe 20 years, 25 years of recorded history did that. This man took $5,000 and turned it into $20 billion. I mean, that's a compound rate in dollar terms over 40%. So he's obviously a very inspirational figure if you want to understand the market. I think the key things that took away from it is the level of conviction he brought to a trade. He brooked no enemies and brooked no interference. He believed in something, and he put his money where his mouth was. As simple as that. So that, I try to learn not the bad parts of his health, but the good parts about how he viewed this as being a mercenary game, that you have to be the best in it. And I really admired him for that. With RK, he's been my mentor. I've been the chairman of his company, so it's been a real honor to have known him. But in my humble opinion, there's only one man in India who's had 3 brilliant careers. He used to be a speculator, he was the best in that. He was an investor, he was the best in that. And now he's an entrepreneur building a great retail franchise. He's the best in that also. Extraordinary career. But the quality that I really need to learn from him, and a lot of us can learn from him, is that he's one of the world's best listeners. He is such a good listener that has made such a difference to his life. It's hard for me to explain the contours of a podcast. Why is that important? Yeah. But I think that has made all the difference in his life. He's a true listener and a true independent thinker.
That's great. Can you just elaborate more on that? Like, he's a great listener. Like, any instances, anything to share on that?
Well, generally, if you go to any room, he's the smartest guy in the room. There's no question about it, because he's done the best in the room. Yeah. So there's no smarter. But he's the guy who talks the least. He listens to other people talk and evaluates whether they're talking sense or not talking sense. To give you a more rational example, when I came up with my public sector call, for example, a lot of people didn't want to believe in it because they said I hadn't worked for 10 years.
Yes.
But he was ready to listen to my logic of why I wanted to buy it. And, he kind of agreed with the logic. So he also bet on that because he was a good listener, not because he believed in the PSU or particularly or anything like that. It's just time after time, the fact that he's the smartest guy in the room would mean that he'll be the center of attraction or talk the most, but he talks the least.
That's a great humility.
Unbelievable humility.
Now, talking about being the best, you mentioned about that it's mentioned you have to be the best in whatever you do. Now, bringing that to your grandkids, like, do you teach them that, like, whatever you're doing, you be the best, or you enjoy whatever you're doing? Specifically, Veer, Arna.
Be the best. Yeah, thank you so much for mentioning the names. I mean, they're 7 and 5, and it has given me a whole new perspective on life, watching them grow up. And I have to tell you the story that when Charlie Munger is now, I use the word in quotes, worshipped by almost 3 generations of the Damanis. Me, my son, and my grandson. Okay. We have a statue of Charlie, a bust of Charlie Munger in my son's office. And Veer, who's all of 7, knows who Charlie Munger is. So he goes and does pranam to him in the great Indian tradition, that you will. So I think they're too young to, get a feeling of what they want to do in life or what to be done in life. But I hope through the video series I've done, or through my sons or the parents' teaching of them, that they will burn a desire in them to be the best. I mean, I truly believe that's an important desire, to be the best. It's not, it will take a toll, of course. Being the best is never easy. It requires long toil and work. But I think being mediocre also takes a toll on you, and I don't think they should be happy or settle for second best, And I also say this again, I repeat it, saying it's not about the money. It's about putting a chest out and saying, I did my best.
That's a great point. Now, you mentioned your son, like, you learned from your father, he taught you something. Obviously, during CMC, there were some disagreements. Now, what have you taught your son, and, like, how does your work equation, like, do you get ideas? Do you all discuss? Are there disagreements? If you can just walk through that.
Yeah, it's a great question. When he joined me in the business 10, 12 years ago, I was a bit nervous because, son-father's relationship is very complex to begin with. So how did it work out? But the good news report, it worked out well. He joined me as an intern in my office. Now he's my partner. So things have worked out pretty well for us. I think first I helped him understand businesses, understand management, took him through the paces of how we value companies, how we value businesses. But, of late, he's been evaluating my career and trying to point out, as only a son can, what are the pitfalls in my career that I didn't bet big enough or I didn't take enough risk out there. Only a son can do that because he is ultimately the best interest in your mind. Yes. So he's helped me broaden my canvas, think through better. So it has worked out quite well, actually, the partnership between us. And I think it'll work out well if the legacy continues, the same good value investing, hunt for a great business, return back to society. I think I've been blessed.
Yes. So you mentioned about basically leaving a legacy behind. So what kind of legacy would you want to leave behind? Like, if so when you mentioned that you always wanted to be the best. So if I think about Ramesh Damani 50 years from now, how do you want to be remembered?
Well, I don't know if I'll be remembered 50 years from now.
Oh, definitely you will.
I think that's very kind of you to say that. I just, I think Warren Buffett was asked that same question, and he said, ultimately, what a legacy in life is who will hide you. He says in World War II, if you had been faced Nazi threat or someone hid you, they really valued your opinion.
Yes.
I think the same sort of feeling comes over me now as I age, that I want people to like me not because I'm rich or because I can give them a stock market idea or anything else, but because I'm genuinely interested in the human experience. I'm genuinely interested in meeting people and talking to them and listening. And I hope they consider me a worthy friend.
Definitely they will. So you also mentioned that basically you're teaching your son about how to identify management, some great business. He's also evaluating your portfolio. Some common 3 mistakes, if you can tell us, and one thing if you could change back, if you could go 20 years back, one thing you could change in your portfolio.
Well, I think I've tried to always compound money, so that's worked for me. I think what I mention often is not being able to take that big enough bet, and it's very difficult to do. It's not easy.
Yes.
I mean, it's very easy to say that I'll take a big bet, and sometimes people are taking a short term. The next idea they make a big bet, and then it blows up on their face. So, if you take a large position, sometimes a small hiccup will make you vomit that position. Okay, with a small position, you'll ride out the bad times out there. So if Rakesh bought 5% of Titan or 15% of Titan, it was a very, very large position, but he had the balls to ride out that position out there. So it's not easy. We all like to think that in retrospect, when stock goes up 100x, 200x, I could have done a large position, I've been so rich. But it's extremely, extremely difficult to do. So if I could go back, I would, try and write bigger positions.
Buying truckloads.
It's hard. I mean, the reason it's not been done successfully by most people is because it's actually hard to do. Because then it's hard to sit through and wait for all the profits to roll in at that point. So I would do that. And see, each generation builds a platform for the next generation. So my father built a platform for me. I think I built a platform for my son. Now Ashok will build a platform for his children. So I hope I build a sturdy enough platform. The intellectual rigor that's required to be in the stock market, to spend less, think ahead, think independently. I hope all those qualities will be inculcated in him and, take advantage of this great opportunity this country is offering right now.
So you mentioned that you were the blessed generation, right?
Yes, absolutely.
So someone who's starting out today, do you think that he can also compound his money at the same pace which has happened in the last 30-40 years, or now the times will be different? If someone wants to start today, do you think there are enough opportunities? Because you basically, when India liberalized, right, there was a tech boom, a lot of things were happening. If someone's starting now, do you think the next 20 years would be different? Money could be compounded at the same rate, or it will be different than what it was earlier?
Well, if you look back a few hundred years back, people who made money were the landed class. Okay, if you had land, you made money out there. Then you got a bit into manufacturing, they made it out there. And now it's all about intellectual property. So anyone can gate crash this party. It's no longer that you have to be born an aristocracy, born a nobleman, born royalty to be rich. It's no longer, in fact, it's probably deterrent. Anyone with brains, energy, motivation can knock on the door. And these opportunities will get even better in the next 20, 30 years. Because, companies that you haven't heard of 30 years ago in artificial intelligence, in logistics, are just coming up from all over the place, making a huge amount of money. I think that trend will go out a lot further. Something may change in 20, 30 years. I don't know, maybe you'll go to Mars and that will mean value on Earth goes down. It's possible. But for the foreseeable future, I think there'll be great opportunities for people as we move into this new world experiment. As I've said to you, if you go through the Force 4000, almost 4,000 of them made money through holding stock, not through a research discovery they made or through land or through property or through royalty, but because they own stocks and the multiple that stocks get. When you have 500 crores, you have only 500 crores. But you have 500 crores in a company profit, At a multiple of 30, that becomes 15,000 crores.
Yes.
And that's where true wealth is generated. And there's now exchangeable and tradable wealth because you can always sell and buy the shares in the marketplace. So I think that trend is, getting even stronger over the next few years. So as interesting and as fascinating the last 20 years have been, I think the next 20 will be more fascinating.
Okay. So we're talking about the future. You have caught the tech ride. You have also caught the PSU rally. Where do you are seeing opportunities, not names, but which sectors do you think could lead the next 5-10 years?
I mean, the bull market is still ongoing, so the public sector stocks itself are, probably still got some ways to perform. They've had a great ride, but some of the other stocks, in the construction space, in the financing space, probably have a ways to go out there. I'm not sure. I had publicly said of public digital infrastructure,
Yes.
but some of the growth that I expected has not come in there. So maybe we need to kind of rethink the outlook there. But there'll be enough opportunities. There are two ways you can play this market. One, you can buy what we call the cigar butts, because they're cheap. You buy them and you make money. So that will continue, obviously, because the market will give you the cigar butt chances. But what we keep looking for is businesses with, definable and sustainable moats that people can't enter into
Yes.
them, even if they try it, And occasionally you'll come across a business, they have a monopoly, maybe on tobacco, maybe on liquor, maybe on a toll road, or maybe on an airport, which is a sustainable monopoly which cannot be breached.
Yes.
And I think now, as my evolution of my own stocking abilities, I increasingly try and find businesses with a moat in there that cannot be beaten down. Otherwise, competition and substitution, as someone famously said, will decimate returns in every business. Okay, any business with high margins
Yes.
can have fair competition, or substitution will take place in that business. So the one thing I have learned over many years is that I used to believe in my early years that growth was a panacea. Growth would take care of a multitude of sins.
Yes.
And for most part it does. But there can be what we call profitless growth. As has been famously pointed out, airlines have grown at 5-7% a year for the last 30 years. But it's been mainly profitless growth for a lot of the airlines for many periods of time. So increasingly, as you say, what am I looking for? I'm looking for businesses with moats. Moats that cannot be breached, and moats that are sustainable. And I think the best long-term opportunities will come from either moats in switching, or moats in technology, or moats in distribution, or just sheer intellectual property moats. That will be the place to look at.
Absolutely. You mentioned liquor and tobacco stocks, and you kind of have a following for these sin stocks. Can you just elaborate why is that so? Like, what is the logic behind that?
People's habits don't change. People, I often say this great story that people ask me, why did I buy the liquor stocks? I said, I bought it because I watched the movie called Diwar. I don't know if you watched that. Have you watched the movie Diwar?
Yeah.
It's one of Amitabh's best films. If you haven't seen it, please go see it out there. There's a particular scene in Diwar which stayed with me all these years. Amitabh Bachchan and Parveen Babi are sitting in the Oberoi Hotel in the bar out there. And Parveen Babi swivels a chair and looks at Amitabh and says, ये शराब भी बड़ी अजीब चीज़ है. इसे देखो, ये पी रहा है क्योंकि दोस्तों के साथ है. इसे पी रहा है क्योंकि वो अकेला है. ये पी रहा है क्योंकि आज इसकी बर्थडे है. ये पी रहा है क्योंकि आज वाइफ के साथ है. Whatever. So it's a universal lubricant. I mean, even if you go to space, you'll have to create a bar because people need a place to hang out and to mix with each other. And I realize that. And as I said, sometimes tech sectors become so unfavorable for such a reason. You'll find this hard to believe, Sourabh, that in 98, 2000, somewhere at that time, you could buy the entire Indian liquor industry, that is beer and alcohol, for about $150 million US. I mean, just think about it, a country of 1.3 billion people with no social bans against drinking as, say, in some of the other countries, and with 10, 12, 50 million people each year coming of drinking age, and you get the entire liquor basket, beer, alcohol, brands, everything for a few $100 million. It was that cheap going away there. So I think these are businesses that, whether there's a boom time, whether there's a bust time, whether it's a birthday, or whether it's a sad occasion, people would like to drink, would like to socialize, would like to have a peg or two, and it may not be the best habit, but would also like to smoke once in a while. So I think these are businesses that have stood the test of time and will keep delivering, good returns for investors.
Agreed. And so you mentioned about Rakesh ji's big position, and like you could write that position as well. So that makes me think that patience or guts, like both are required in investing. Which one do you think is more important?
There's a very profound saying about traders, at least. It says that I've met a lot of old traders and I've met a lot of bold traders, but I haven't met an old bold trader.
Yes.
Correct. So the same is probably true of investing. That you could probably meet. I think Buffett or some Munger said the biggest mistake investors make is not being able to sit on the rear end. You have a good position and you get antsy because the stock's gone up, or because the stock has not performed, or because a bad quarterly number comes out there. So I would say between guts and patience is more patience. It's not a business, as often said, a very high IQ business.
Yes.
It requires the right temperament, and one of the bulwarks of the temperament is patience. To be able to sit through a position, sit through a soaring stock price or a falling stock price, because you know the underlying value of that business. So if you figure out the underlying value of the business, that is what really helps you.
That's a great point. What's one question which people don't ask you, but you would like them to ask you?
What people don't ask me and what I would like people to ask me. I think the question that I have often asked myself, and it's a question that the answer is still a work in progress, is what is more important in life? Is good luck or skill? What is more important in life? And when I was younger, I would say skill was important. But now I keep thinking luck, and I'll reference you back to my old answer that my generation of Indian that was born in the 50s and early 60s, we came of age in 1990, we were 30 years old out there. We were the blessed generation. I mean, before that, we all struggled. So we won the ovarian lottery by many ways. We had a country that grew at 8%. Tax rates were 90%, came down to 20%. We modernized. The internet came on to being. Democracy paid its dividend. So in that sense, I was lucky that I was born at the right place at the right time. If I was born in Central Congo, I would still be struggling in the mine, trying to scratch a living, or probably, fending for a few dollars for myself. So I would say that, and I for a long time believed it was my skill, but increasingly the humility has taught me that it is
luck is equal.
It is my luck. I was at the right place at the right time. My father left a platform. I could build on that platform, and hence the great sense of humility and give back that a lot of people in my generation feel, that we were blessed. My father, as I often said, is just an astute stock picker as I was, but he was fishing in a very small pond.
Yes.
And when we came of age, the pond expanded dramatically. I mean, we could, on a really busy day, even in 1990s, do maybe 400 crores worth of turnover in the BSE, a really busy day. And we would all say, oh my God, volume bahut tha. And now you can do, 4 lakh crores probably.
Yes. But they say luck favors the bold, and like I agree, luck is important, but the way you have basically for years held on to your stocks, compounded them at such a great pace, that itself is commendable.
Thanks. As you say, a rising tide lifts all boats, and the rising tide of India lifted us all.
Definitely. Sir, one thing which I would like to point out, like when I met you around 10-12 years ago, since then you have become a lot fitter, a lot healthier. So is there anything that you've purposely done to your lifestyle? Because you mentioned about Rakesh ji, like he was too much focused on the market and he paid a price for it. So how do you balance your work and life?
Well, actually, to be honest, I really enjoy playing with my grandchildren. So that gives me an incentive to be healthy, so I could play with them, travel with them, have fun with them. Health, I think, over time we've all become aware of the importance of, working out and eating right. And, I think the hubris that comes with dekha jayega, I think as you see a few deaths in your lifetime and few people passing early, I think that vanishes very quickly. I'm very keen to see my grandchildren grow up, so I think that gives me a good motivation to try and be healthy.
That's a great answer. Now, talking about Veer and Arna, like what lessons do they teach you? Because you mentioned that your perspective of life's changed since they were born. What lessons do you learn from them?
It's very strange you ask me this question. I think Veer, I don't know why, I'm not sure why, but I see a younger self of myself in Veer when I see him. It's the sheer lust of life that he has. I find it so contagious. And Arna is so sweet and so, taking care of everybody, including a brother, including her grandparents, whatever. So they're two different people on the spectrum pole, that you will. But, and I really adore them both. But with Veer particularly, I see a younger version of what I would have been probably. Okay. So he delights me in ways that only a grandfather would understand.
No, absolutely. Because I have nephews around me, and like I also get a lot of joy when I meet them. So I can definitely relate. So any habit outside market that help you in investing?
I mean, the habit that is without doubt the most important part of investing is being a good reader. I mean, I mentioned a good listener, that of course there. Yes. But being a good reader, I think, and I just like reading for a life. So I give this example to other people that when I was 10 or 11 years old, I used to go out to buy bread for my family. And that time I used to get those paos which are wrapped in paper. And while coming back, I would be reading the newspaper that the bread was wrapped in. So I had a very early kick of reading. I read Time magazine and Economist when I was young. I've read the Wall Street Journal for almost 50 years now. As I've often said, my wife calls me a book with two legs. So I really enjoy reading. And that is the one thing that really helps in the stock market. I mean, if you ask me one thing you could do to increase your child's success in the stock market, if you were interested in the stock market, I would say get them to a love for reading. Broad variety of subjects, not necessarily about stocks. Biographies, political, history, science, philosophy. It will all accumulate in some extraordinary amount of knowledge.
It's a great answer, sir. So now talking about, like we've spoken about your personal life, okay, professional life. Now I want to know, what is your personal bucket list? Like now you said that you're closer to retirement, you want to spend time with your grandchildren. What is your personal bucket list now?
I mean, it keeps varying by the day, but I think like most people, I enjoy traveling. There's a lot of countries I haven't been to, and I want to go there in a bit and fast forward. So enjoy traveling. I have some bad habits. I enjoy a smoke occasionally, so I will smoke. But I think in the next 10 years, as you mentioned, if I learn to give back, there's various ways, whether I give back by helping people, by teaching, by money, or by any other matter. I think that would make for a more meaningful life for me. I think, as I said, when you feel blessed, you want to return the blessings.
Agree. You mentioned about newspaper, and I was reading one of your that your grandson came and he's like, my grandfather doesn't work, and that was a very fascinating story. Can you just tell us about
I'll tell you in Sanksheep, jise bolte na, I did that. So my grandson was traveling and he was missing me, so they put him on video to talk to me. He said, "What are you doing, Dadu?" And I said, "I'm working. What do you think I'm doing?" He says, "You never work." I said, "What do you mean?" He said, "Whenever I come to the office, you're always sitting on the sofa reading a newspaper." I said, "Who works?" He said, "My papa works. He's always on the computer, So he has a different perception of reality. And it was a common complaint for my first years that I was reading too much. They didn't understand, the family or the people who told me, that in this business it's not about hustling or going out meeting people. It's about reading and understanding and becoming smarter every day. So it is important whether my grandchildren understand it or not, or whether the other parts of my family understand it or not. It is the critical component of a good career in investing.
So you mentioned that reading is a very important part of being an investor. Could you just walk us through a typical day? Like, what does your typical day look like?
Well, of course, my typical days are much older now. So, when I was in my 40s and 50s, I would maybe read 6 hours a day, sometimes even 8 hours a day. So I was, a voracious reader, and I love reading out there. Now my eyesight is not that strong anymore, and plus I have a distraction. So maybe I read 2-3 hours a day, not as much as I'd like to read. I still enjoy it, but I just don't get that much time to read. But I'm happy to report that I'm still active, Sourabh. I mean, I get into work at 9:30 most days, and I don't leave till 6:30 out there. I'm visiting companies maybe 2-3 times a week, knocking at doors, talking to people, because I'm known now it's much easier than getting an appointment with them. So that always helps. But like most good investors, I'm always looking for the next great idea. So that, if you ask me what keeps me up at night, the next great idea I'm finding. So I really enjoy the process, and I'll give you a story that someone asked Warren Buffett once. Says, Warren, how do I become like you, but only sooner? And Warren apparently replied to him that, that this is a young guy asking the question. He said, look, I'll take a lot of the hair that you have and 20 years of your life and give you a lot of my money in return if I could live for another 20, 30 years. And I somehow start feeling the same way, that I wish I could give away the money, because I know I can earn that back as long as my intelligence is still there, and enjoy the next 20, 30 years, which is going to be unparalleled. The 3 Ds that are propelling India at this point, sort of. There's democracy, there's demographics, and there's digitization. And those are very powerful secular forces that will drive this country for the next 10, 20 years. And there'll be ample opportunities to make money. So, do I hope I had more life? Yeah, I pray, like most people I do, but unfortunately we all come with a finite life, so that's the way it is.
That's an insightful answer. And you mentioned that still you read a lot and there's a lot of passion in what you do. Since 40 years, it's been 40 years in the markets. What keeps that passion alive? To keep finding good opportunities to
be the best. I mean, I came across that very late in life, Sourabh. I didn't realize that, when I was in school, I always wanted to be in the middle, never stand out or something.
Yes.
But as you evolve in life, you realize the importance of taking some chances, getting out of stream, and being the best of life. So the passion is to be the best. That drive still, resonates deep within me, that I want to be known as one of the best stock pickers out of India. And I'm saying this with the most humbleness and the least amount of hubris possible. It is just, a self-imposed goal, to be known as the best. I mean, I don't think I've done justice to myself, because the opportunity is there, to be counted. I mean, Mr. Jhunjhunwala, for example, to come back to a point, in his legacy, when the history is written of this period, we count as among great investors in India, perhaps of the world, because he had a compounding rate in dollar terms which matched or beat the best in the world out there. So there's a great opportunity this country is affording us. And if we don't take advantage of the opportunity, we should blame ourselves, not the country and not anybody else. So that's what drives me in the morning. That's what keeps me up in the morning. Why I'm working 60, I clearly don't need to work. I can clearly go onto the golf course, or clearly go sailing, or clearly travel all the time. But I think desire somewhere that maybe I can be at least a little bit better.
Absolutely agree. And this is being the best in the business. That's a great point you make. There's a two thoughts. You be contented with what you have. You strive to be the best.
You don't be contented. It's the contented people that are sometimes the dangerous people. It might be okay for some people, but if you want to accomplish something, you want to achieve something, you have to be a malcontent. You have to, kind of wake up every morning, say, I'm going to redo the world. You got to be a Jeff Bezos. Look at the audacity of the man driving from, New York to Seattle. He set up Amazon.com and said, I'm going to be the biggest retailer in America, and he did that. So the world belongs to the audacious people. And I think it's so important to, foster that. I think the minute you're contented, you let out a passion, you die. You don't want to become irrelevant in life.
Agreed. So you mentioned about passion. You talk to a lot of great investors. What is one quality in them that you see common amongst all the great investors?
I think the word you mentioned is passion. They would do this business even if they weren't paid for it. They just love finding great companies, seeing the economic opportunity the next 5, 10, 20 years out there. And a lot of them, Warren Buffett lives in the same house for 50 years. It's not about spending the money, It's about how you figure it out that you're intellectually the smartest. You're the 200-watt bulb in a 100-watt bulb room, and this is an intellectual business, so that keeps me up. And I think all the smart investors want that. It's not about the money. Yes, of course, you measure some money, and we always feel good when we have more money than we have less money. But at the end of the day, did my ideas work? Did people come flocking to my ideas? That's the kick we get.
Yes. Strive to be the best.
Yeah.
Thank you for answering all the questions so patiently. It was insightful talking to you at a great time. And all the lessons you shared, I think, will help me and the viewers. Thank you for taking out time for today. It was a pleasure talking to you.
Saurabh, you mentioned you're so kind to be so patient with me and all that, and end with the poetry I use in somewhere else, but I think it's worth repeating. I asked for all the things to enjoy my life, and God gave me life so that I might enjoy all the things. I got nothing that I asked for, and yet everything that I hoped for. All my prayers were answered. I, among all men, am most blessed. I'm most blessed. So I feel very blessed and very lucky that you honored me by asking me today. And thank you for sharing your podcast with me.
Thank you, sir. Thank you for being present and sharing your insights with us. It's pleasure is completely ours.
Thanks.